Good morning, everyone. Welcome to our Friday morning trading room. The market's just opening up and they seem to have a little bit of a bearish slant to them this morning. This after a fairly bullish overnight. So the market's leaving off down here after more or less spending the day in a sideways range as we anticipated. The Asian session and the European session both putting in a little bit of a rally. So we've got ourselves a bit of an opening gap here to the short side, just underneath. And the eagle actually producing a rule of 3 signal right out of the open, or very close to the open, and a quick little decline from there. We'll see whether or not that's going to stick. Right now, we're definitely bearish. We'll see whether the market tries to get into that gap. Or whether the buyers are going to push us back above yesterday's trading range. If we take a look here, yesterday's highs, the highs of the session coming in here around 69.70, and that's where the overnight topped out as well. So we did hit 7,000 a couple of days ago, and the market's been hesitant to do that again. Let's put that away. So a couple of early signals to sell, but it's still early. Look at that, the buyer's pushing back already. Here on the Raptor, we're getting a soft edge buy. The target for this trade is the hard edge of the trading band, so it's really a little bit more like a scalp. We're also getting a 4-arrow consolidation here in the Hawk to sell. Back in the hard edge on the Eagle, and the Falcon starting to look a little bit more bullish. So we've got ourselves a little bit of a mixed bag right now. I think I'll wait just a little bit longer until something looks a little bit more promising. A first micro macro cross now to buy in the Hawk. So the Hawk reversing on its earlier signals. I was going to shoot a trend line across here. It's going to be pretty shallow though, but There you go. It looks like maybe somewhere around the 69, 67 area. We may find some sort of resistance, or perhaps even a breakout. Okay, back near the high of the morning, we're getting knocked down. A macro pullback signal now on the Hawk, so the Hawk's still bullish. The Falcon, we don't have the warning dot yet, but it's trying to do a trend change signal. The Eagle producing a green bar sell, and the Raptor giving us an early cloud crossover. This is going to be a number one signal if we can produce the green setup, the warning dots, and so forth. Okay, so the Falcon already bullish. We've got the warning dots. We don't have the signal just yet. The macro pullback signal is complete here on the Hawk. You're probably wondering, well, hey, Eric, if you're pointing out all these signals, how come you're not taking any of them? Well, partly it's still early, and partly that trade requires a rather substantial stop loss. So I'm thinking maybe if the market drifts a little bit lower here, I can get a red bar buy, or maybe something that's a little tighter in the setup. And I'm not totally convinced which way the market is going today. You can see we're still kind of bouncing back and forth quite a bit. All right, so things looking a little bit more bearish again. We've got the red bar buy signal that we can short or buy. So you can buy it long. It should head up to at least its profit target because we need to see a retest of the high. And I think there we have it. We could also use it as an early opportunity to short should the market break down. The Falcon now working a trend change signal to the short side. May even couple that with a late filter entry. We'll see. Oh, no, we won't. Because now the trend line is starting to change color. Tight little trading range we have going on here. Every time it seems the buyers try to rally, they're getting knocked down, and then we come back here to the median line where they seem to find some sort of support. Another first micro macro cross to sell. The eagle very sideways here at the moment. And this is possibly going to be a number one cloud crossover signal to short. All right, more consolidation, a possible trend change now. Things starting to look like maybe the bears are going to give this a serious poke. No sooner do I say that than the buyers push back. Well, we've got the makings of a 4-arrow consolidation here in the hawk, even though it's only 3 arrows. The principle remains the same. You see how it has this bear flag shape to it. You could hold out for the 4th signal, or you could try to short it early. The 4-arrow consolidation is the only signal on the hawk that I will take on a yellow bar. It would be nice if there was a little bit more stuff in sync here. The eagle showing it really sideways congestion. And now we're going to try to rally for a few minutes. I tried to head lower for like 10 minutes. Now we're going to try to head higher again. I guess there have been some scalp opportunities here. You could have gotten in and out with a quick little profit, but other than that, not too much. All right, another first micro macro cross, another trend change signal to the Falcon. So the buyers are trying to give it a go. Like I said, there's probably going to be enough in here that you can at least take a scalper's profit. Until we start breaking outside of this range, however, it's going to be a little dicey. All right, and now come the sellers, and we got ourselves a cloud crossover signal. Wow, what a sideways mess. You know, it is a #1 signal. I wouldn't take it here. I'm not even sure I would take it on the second push. A break below the low, okay, that might be worth a go. Let's see if the market gets into that gap that they left themselves out of the open. Well, they didn't slip me a tick, I don't think. No, actually positive slippage. Whoa. Let's see if they can get down below the lows du jour. We have any follow-up signals? Yeah, there's the first micro-macro cross. The Falcon now trying to work its trend change signal to the short side. Yes, Joel reminding me it's option expiration day today. And as such, the buyers might be inclined to try to support the market a little bit. I'm going to get tagged here. In hindsight, I should have taken it on the hash mark. Yeah, I didn't think they were going to let me out of that one. Stinkers. All right, well, if they don't want to go lower, then that kind of sets us up for a buying opportunity. We've got ourselves a first micro macro cross here now on the hawk. So we've got the warning dots. We don't have the complete signal here too. You can look to enter thusly, maybe on a breakout. You'd want to cover below at least below the macro line, or ideally outside of this range, the bottom end of the trading range. That's where you already know there's a lot of buying. So I could set it up like so. Let's give it another tick or two. I don't want the same thing to happen that just happened to me. Namely, I got stuck in a sideways range. I'm looking for some momentum on a breakout. I don't want to see the market just break this little high by a tick or two and then reverse and go back inside the trading range. That's what I'm trying to avoid. Come on, let's go. Well, that was unfortunate. Should get another chance. Here we've got a number one signal has produced. Same kind of idea. Joel's asking, what's that little L-shaped thing that's producing next to the candle on the Raptor? That, Joel, is actually related here to the Geiger counter. It is kind of shows you the immediate bias of the candle. So you're not always having to look at the Geiger counter. Okay, so we're producing a hard edge bounce now on the Raptor. Hey, way to go, Ryman. Ryman says, I just scalped and got 94 bucks. Good job. On a day like today, good job. All right. Somebody's going to dip their toe on the other side, and I'm going to adjust my profit target. I don't think we're actually going to get all the way up here, but I'm going to try to take a little extra out of this one to offset that earlier stinker. Now, I know that's very often that's asking a lot of the market, but we'll see. We'll see what they do today. If they settle into a trend, there's actually a pretty good chance. Of course, first we need to deal with the overnight highs and the primary resistance line. Yes, I did reply, Joel. Joel had to step away from the computer. This red or green L shape that envelops the current bar is actually related to the Geiger counter. Kind of gives you the immediate short-term bias of the market. Yeah, Dan says it's a good day to practice patience. You got that right. Wow. Just going to take a look at the reports calendar. I'm not sure there's any reports out today. No? Boy, we just can't get outside of this trading zone. The tools at least coming into sync a little bit. We're a little bit more consistent. And we've got a bullish hawk now, a bullish falcon, the eagle also turning bullish, and of course the raptor is bullish. All right, so now the overnight highs, yesterday's highs, 69.71. The trade at break even, I think I would have found my profit objective. Yes, I would have if I were smart enough to take it. Are they going to let me ride out the swing? Nope, they're not. Shoot. Yeah, Joel says never has so much effort been spent for so little return. It certainly does seem that way. Dan says, I fight needing to trade. I sit today with one target reached, arms tied to my chair. Yes, that is the tough part today. The discipline to not to do something too stupid. Mama always said trading stupid. Okay, Joel says the Elliott wave guys are saying we are in a minor fourth wave. It looks like the seller is going to take another whack at it. A first micro macro cross lower. Or not. Nope, into yellow bars. So we'll cancel that. All right, they're thinking about it. Possible late filter entry to sell here on the Falcon. Another first micro macro cross signal now on the Hawk. All right, well, there's the number 2 signal now. Again, you don't want to be too quick trying to short this because we are still sideways. But a number 2 signal on the heels of a number 3 tends to have a little better follow through. And I'm going to extend my target once more. Come on. Now, not a whole lot of follow through from anybody here today, but I'm fairly confident we should see the sellers make at least one more push lower. All right, they're trying. There we go. That's more better. Oh, come on, you guys. Don't bounce too much now. The market hesitating a little bit just ahead of the median line. I'm looking forward to trying to recover near the low of the day, which would be a fairly substantial move. Oh, no. Not again. On the retrace. Doggone it. Oh, good thing Mark's not in the room. He'd be scolding me for not taking my profit when I had it again. Nuts. All right, here they come one more time. Oh, there's my sell signal. Am I going to get a chance to put that in? No. Shoot. All right, well, now I'm kind of on hold. Oh, darn it, Mark is here. Yes, I know. Mark says, coulda, woulda, shoulda. If they, if the sellers get their act together, this is actually a very broad trading range that we have. We have the kind of the shorter term trading range here. It looks like there's some buying coming into the market. But if we can press through here, if the sellers press through here, not we, but if the sellers press through here, we have a really big trading range. It doesn't show up so well here on the Eagle chart, but it essentially extends like this. So you can see there is a bit of room here to move if the bears manage to get the market under control today, which, it's doubtful the way things are going right now. Yeah, Mark says I've been trying to recover from an earlier loss myself. Finally back to break even on the day. No shortage of whip. Okay, the buyers are going to press now, take their turn, try to run things back up to the highs. Yeah, Mark says at least my broker will be happy. Yeah, they love it when you churn your own account. They don't have to do anything. And Mark makes the comment, big difference from last Friday. Ain't that the truth? Well, they're not wandering too far from their opening prices. Well, just have to wait a little bit longer. Yeah, Mark makes the comment here. He says, I'm up over 3K on the week, and I'm not going to give any back at this point. We have a pretty large sideways range. Adjusting my profit targets down and going for scalps at this point is probably a good idea. Yeah, we're sure waffling a lot. No question. All right, so here we go with another buy. Another poke at the top end. We got a crossover buy forming. I'll give it a couple of ticks here on the entry. Yeah, Joel makes a good comment here. Joel says, I remember when option expirations made for wild days. Seems the opposite now. Yeah, there was always a lot of volatility on Fridays. But you're right. Like today, could it be any more dead? Oh man, just terribly quiet. Well, there's another little 4-arrow consolidation slash macro pullback scalping opportunity on the Hawk. The Hawk actually producing pretty well today. Had I just taken profit on target, here was a first micro macro cross lower. Here now the macro pullback higher. We did have another first micro macro cross here that went higher. A macro pullback that worked out not too badly. So some decent opportunities in the Hawk, and that just kind of seems to make sense. The Hawk being the scalping tool, and the market kind of in the scalp type of day. I know Trade Forecaster says we're supposed to be in trend mode. That hasn't been the case, though. Yeah. Yes, that's right. Joel says the trade forecaster could mean a sideways trend. Yeah, that's what we got. We got ourselves a sideways trend. Oh dear, it looks like I got slipped on the entry there as well. Yeah, they did. They slipped me. Okay, we'll see if we get any follow through from this cloud crossover signal now. And Peter asks, good morning, Eric. I use your ultimate support and resistance lines using the Eagle with a 12 tick on the NASDAQ. The lines are nicely spaced apart, but when I use it on the 6C, the lines are much closer. Do you adjust the tick number so the lines space out more? Last year I did so well with the NASDAQ that this year I'm trying other instruments. On the ES, those lines work really well. No, the tick value has absolutely nothing to do with the spacing on the lines. Now, visually, it may look a little better if you adjust the tick value down on the 6C, the Canadian dollar. And that would be because the 6C relative to a market like the NASDAQ or one of the other markets we follow would be relatively quiet. But by expanding the bars a little bit, it will look like the lines are further apart, even though the line values themselves will not change. Oh dear. Well, this may take a little while. If we can get above the high of opening range here, we should see a retest of the high of the morning. And maybe even a profitable trade. Ooh, imagine that. Dan, I'm not entirely sure your question. Dan asks, how do you get more intervals on your chart? Your chart shows more than mine. If you're asking how do I scrunch up my chart to get more bars on it, hold down your control key and hit your, hold down your control key and hit your up arrow, and that will scrunch up your chart. Or you can do the opposite and expand your chart. Almost to break even. Woohoo! Look at us go. Oh my gosh! I can't believe it. Oh, whew. Wow, that was hard work. And I have a feeling I'm going to be glad I took profit where I did rather than try to stretch this trade out again. Oh yeah, now they're going to go. Oh well. I managed to get myself back to even, so, and I've hit my trade quota, so that might be it for the day. Yay, Mark says finally in the green. Oh yeah, and the Falcon trend change signal right there. Nice little move. And look at that, we're actually getting some follow through higher. So who told them that I was all in, all out on the trade? Who blabbed? Well, you knew it would have to shake loose sooner or later, right? The market's not going to be stuck like that all day. And I don't know if I'm going to call this a trend yet, but it's a good start. Definitely looks like we're going to have a little bit more of a bullish slant on the day. Dan's asking on the support and resistance, which line is the major line? Okay, the way it's split up, you've got an assortment of 21 support and resistance lines. And generally speaking, they are all equally strong. However, you're going to notice here in the middle, we've got a gold line followed by two blue lines. The gold line is your median line. It essentially tells you there are 10 lines above and 10 lines below. The blue line above is primary resistance. The blue line below is primary support. These three lines tend to set the tone for the day. So in that sense, you could refer to them as your major lines, right? If the market gets above primary resistance, or if it stays above the median line, we're going to have more of a bullish bent on the day. If it gets below, which it really didn't get below today, but if it gets below the primary, the median line and the primary support line, then we're going to have a little bit more of a bearish bias on the day. Generally speaking, when the market bounces off of or breaks a support or resistance line, it will tend to move two zones. So this is zone 1. This is zone 2. I would anticipate, now that we're through here, that we're going to see the market try to get up to 69.88 which is the next resistance line. If it turns out to be a really strong day, we're going to cover the third zone as well and get up to 7,004.75. That, at the moment, seems rather unlikely. This is why I will use the support and resistance lines as targets as well. Joel says the SPX, the NDX, and the Dow all have taken out yesterday's highs. So it seems like we've got some confluence across the indices. Yeah, for now, Joel says, for now. I agree with Mark's comment here. Probably a bunch of stop running caused that little uptick. So sellers that were short from 69.72, well, where would their stop loss orders be? Well, they would be right up here, right? So as the market trades above here, it starts to engage these stop loss orders, effectively stopping the shorts out. Well, their stop loss orders are buy orders, aren't they? And that's how we get that little quick uptick. Joel says the Russell's taking the day off. Yeah, Russell's not doing a whole lot today. Dan's asking a pretty good question here. Dan's asking, so the hawk signals would be a good chance to get back in? Okay, the hawk, just like the other tools, we've got what we call our high probability setups. And then we have everything else. We have these follow-up signals that don't really qualify for the high probability setup, and yet the signal parameters have been met. If you believe the market to be in a strong uptrend, then these are definitely good places to get back into the market, or even to add to an existing position. Let's say you took this macro pullback / 4 arrow consolidation / first micro macro cross signal, and you were looking to add to your position, you could certainly add to your position at these follow-through signals. The problem with these kinds of signals is, where do I cover the trade? Right? There's not a whole lot of structure here. You don't want to put your stop right there. Ignore the amount for the moment, just consider the location. You're going to get filled, no problem, but you are really asking a lot out of the market not to stop you out this close. Likewise for here. Note how the trade manager keeps your risk amount the same. I always tell you to go 2 swings back. Well, you don't want to micromanage this. You don't want to say, oh, well, there's swing 1, here's swing 2. No. You want to look for the obvious swings. Likewise, I would say this is probably swing 1, but I would not say that is swing 2. Neither would I say this is swing 2. I would consider this a second swing, which is also very close to the crest in the macro line. So this is a doable trade, to be sure, but chances that the market's going to pull back first, maybe even rather deeply, are probably pretty good, especially given the way the market has been moving. Dan asks, well, what about the support line? Well, yeah, there's a very good chance the market will pull back to the support at 69.71 3/4. If you're asking, is that a good place to put your stop? Well, yes and no. Again, the whole point of a stop loss, the stop loss is your safety net, right? Your stop loss, if it doesn't get hit, it doesn't matter where you place your stop loss. If you get your profit target before your stop gets hit, it really doesn't matter, right? But if you're on the high wire and you get blown off, well, that safety net's going to keep you from splitting your melon open. So you should think of it as the same way in your trade. And to that end, your initial stop should be as far back as you can manage. The further, the better. Because the last thing you want is you want to say, oh, well, look, I've got primary resistance right here. I'm going to place my stop just below primary resistance. And what happens? The market comes down, and you guessed it, it breaks it by a tick or two, and then it starts to go higher without you. Right? This is not what you want. You want to, if the market's going to come down, okay, let it come down. And then when it reacts, you can say, okay, now I'll bring my stop up. So whereas your initial stop was $400, your adjusted stop is now $200, and it hasn't been hit yet. In these kinds of situations, when we have such a broad range to try to cover, I usually like to allow the market to pull back a little bit first. Now that it seems as though we've made a breakout, wrong tool, made a breakout outside of the trading range, the market's going to try to retest that breakout. And I'm going to look for evidence that the breakout's going to stick, that the market, in fact, is going to head higher. There's no proof of that yet. So I think, to answer your question, yes, you could certainly add to your position at these other signals, or even initiate a new position at those other signals. But it's going to demand a rather substantial stop to start, and maybe, maybe waiting a little bit longer would be the better course of action. For those of you new in the trading room who may not have heard me mentioned this before, but when you're inside a trading range, and it's fairly obvious that you're inside a trading range, the best course of action, well, okay, you have a couple strategies when you're inside a trading range. Strategy number one is there's going to be buyers down there, kind of the bottom third of the trading of the trading range. You're going to have sellers up here around the top third of the trading range, and the middle of the trading range is no man's land. So strategy number one is you sell as the market gets near the highs. You buy as the market gets near the lows. One of your trades will be a loser because the market will eventually break out. The other strategy for a trading range, and my preferred strategy actually, is to leave it alone. Leave it alone until it gets outside of the trading range, and then look for the retest. The market will come back, and sometimes it comes back quickly. Sometimes it won't come back for an hour or two, but it will come back and it will retest that breakout. At that point, you can see whether the breakout's going to stick. And likewise, it will do the same to the bottom. Now, sometimes it will drift into the trading range a little bit, and that's okay. What you don't want to see is you don't want to see it drift well into the trading range. This is going to negate any attempt to move the market lower. You'll get the little move like that to try to sucker people into selling it, only to watch the market reverse and probably continue inside the trading range for a while. All right, so let the market break out, let it retest, and then prove to you that it can stay out. Look for that signal. And that's the safest way to deal with the trading range. And as you've probably already figured out, when you think the market is moving sideways, you're probably going to be better off going all in, all out on target, and probably even scalping. And that looks like it's probably a good way to finish off the day. It's a tough day today, no question. The market does have a little bit of an upward bias to it, but honestly, it's going to be tough slogging today. If you are going to hang out and you're trading the Raptor, look for a retracement, a hard edge bounce. That might be a good buy opportunity for you. You're going to get another macro pullback here on the hawk. That will also be buyable, but maybe just for a scalp. It's just as sideways as the market has been, we're seeing very little follow through. And I'm thinking a retrace is inevitable. We're going to get back to 69, 70, 71, 72. And I don't want to be buying up here only to watch the market fall, right? Or you can just go do something else. All right, everyone. Have a wonderful weekend. I will talk to you on Monday. Bye for now.